Well, folks, there's a lot of confusion out there. People are looking at their portfolios. They're looking at the market. They're wondering what is going on. For instance, the public account. This was $3.3 million portfolio hitting all-time highs last month. It is now just over $3 million. A year ago, it was $2 million. It was $1.2 million 2 years ago. So we've had a substantial move up over the last couple of years. Now people are looking at this market wondering, are we about to experience a 2022-like crash in the market? What I'm showing you in front of you right now is Q4 2021 through Q4 2022. Now, from peak to trough, we had about a 37% drop in the NASDAQ. We had around a 33% drop in the Russell 2000, and we had around a 25% drop in the S&P 500. It was a 1 year long crash, and it took a year for recovery, which means essentially from Q4 2021 through Q4 2023, we had basically nothing to show for in regards to the market for 2 years, right? And people are wondering, have we started a new downtrend that is going to be similar to 2022? And so at the beginning of this video, I'm going to show you the data and the two ways you can get a stock market crash, because there's only two ways. If you look at all the stock market crashes throughout the last 100+ years, they all happen for one of two reasons. And so we'll speak about that. I'm going to share those two reasons with you, and then we're going to talk about, do we have either of those reasons in the market right now, okay? Revolve stock. We're going to talk about Revolve stock in this video. We're going to talk about if this is a great opportunity or not anymore. We've over doubled our money in this one, and they had earnings last week. So we'll get into that one a little bit. Fubo also had earnings on Friday. So that stock ended up getting hit pretty hard. It was down about 14%. We'll talk about my opinion on those earnings and where this stock is headed now at this point in time, talking about where the stock is headed, not only, over the long term, but also what I think is going to transpire in the short term here. Cheesecake Factory. Listen, the stock's about to pay a dividend. And I know there's some folks that have gotten in the market the past year or so that might be thinking about this strategy where essentially you buy a stock right before they're about to go ex-dividend date, right? And then sell it off right after, right? Because naturally people are trying to find hacks in the market, and they're like, wait a minute, I could just buy a stock ex-dividend date, then sell it the day after, then I still get paid out that dividend? It seems like a great hack, right? We'll speak about that in this video, okay? And I'll explain some things that I think are very, very important in regards to that, okay? AMD stock. We're going to talk about AMD stock. When are the gains for the stock, right? I want to talk about the stock price specifically and when I believe the stock price will start to perform when it comes to this company, right? We're not going to do fundamental talk for AMD here today. I've talked a lot about the fundamentals of AMD for the last couple months now at this point in time. So really talking about the stock. Monster, they reported earnings this past week. Stock made a nice upward move. We're now up 9% on the position, up $4,600 in a pretty short amount of time here. We'll talk about how high this stock can go, if there's a lot of room for the upside, potentially in regards to Monster, okay? Whew. Action-packed video on a Sunday, folks. I appreciate y'all being here. As always, one thing only I need from you guys is for you to smash that thumbs up button. I hope you guys can do that. Take the time out of your day to do that for me. I appreciate it. And additionally, if you want to be subscribed here to the channel, you can certainly subscribe to the channel. Additionally, if you're looking to apply to join my private stock group, get access to 1000xstocks.com, all my courses, all the Discord chat, all that good stuff. Pin comment down there, click on that, fill out a form. We'll see if we can get you access to that this upcoming week, okay? Alrighty, guys. So, first off, are we in for another crash? Have we started the new crash? Well, here's the deal. There's only two ways to get a stock market crash. And once again, you can look at the past 100+ years in the stock market. I've looked at every single crash, and every single crash was because of one of two reasons. You either had major recession coming or occurring during that crash, right? Or you had the Fed raising interest rates. It's one of those two scenarios, and that's it. People make the financial markets and the stock market much more complicated than it has to be, right? They overcomplicate it, and I think sometimes it's just natural human tendencies to want to overcomplicate everything in life, right? We overcomplicate, and at the end of the day, like, you could just boil things down in life to like, do this action and you're going to get this result. Instead, we make things so complicated, including the stock market. And like I said, go through every single stock market crash the past 100+ years, and you will find every single one of them was because one of those two reasons. There's never a stock market crash that ever occurs in which one of those reasons is not present. It has to be there to get a stock market crash. Otherwise, you can't have a stock market crash. You can have corrections where the S&P will go down 5, 10, 15%, whatever, but you can't get that 25%, 35%, 45% type crash unless one of those two reasons are present. Other than that, you're just going through volatility. And good examples of this would be 2008, right? Major recession was coming, right? Things started to weaken considerably, and I'll show you the data around that in just a moment, and exactly if you're trying to look at timing and whatnot, how to kind of get ready for something like that, right? 2020 was another great example, right? The Rona crash, like, the whole worldwide economy is going to close, we're going to go into a major recession. So both of those were great examples of that. And then in recent times, as far as Fed raising interest rates for some stock market crashes, right? The Volcker era, if you look back at the summer of 1981, for instance, the Fed had raised, Paul Volcker had raised interest rates to around 20% Fed funds rate, 20%. Nowadays, we can't even imagine that. Like, we think of 5% Fed funds rate is insanely high. 20% is beyond ridiculous, right? So there was a whole stock market crash that happened back then, right? Then you could look back at the 2000 crash, right? Fed starts raising interest rates, boom, whole market crashes. In 2022, Fed starts raising interest rates, whole market crashes. It's the only way you can get a stock market crash if you have one of those two reasons present, okay? Now, check this out. Let's talk about number 2 first, right? The Fed, before we talk recession. Is there a possibility that in 2025, the Federal Reserve starts another hiking cycle? Which, once again, when the Fed starts a hiking cycle, you can get an actual stock market crash. The answer to that is no. No. We do not have nearly enough inflation in the economy to get another Fed hike cycle now at this point in time. I would put it, there's always a possibility of everything, but I would put it at less than a 1% probability the Federal Reserve raises interest rates in 2025. Less than 1%, okay? So what we're in right now when it comes to Fed and what they're up to, we're in a cut cycle or a stagnating cycle. And so essentially the Fed will cut rates, then they might worry about inflation a little bit, and then they'll stagnate for a bit. And then inflation will get to kind of numbers they're looking for, and then there'll be some sort of economic worries, and they start cutting again, cut, right? So this is a sort of cycle we're in now at this point in time. For the Fed to raise interest rates 3 years from now, or 2 years from now, or 5 years from now, or 20 years from now, that's anybody's best guess. But in 2025, this isn't happening. So we're not going to have a stock market crash based upon the Federal Reserve raising interest rates. That's just not happening, okay? Which means if we're going to have a stock market crash in 2025, it's going to be because recession is coming and occurring right now in 2025, right? So you have to begin to look at data. Do we have the data to support something like that? Well, if you look, the unemployment rate is just not showing any significant signs of bumping up right now, okay? You're going to need the unemployment rate to start spiking month after month after month for a while. And when I say a while, I'm talking for several months. The unemployment rate's going to have to spike. You have to see major jumps in unemployment claims to be able to essentially get a real, the recession's here, it's coming, it's hitting, big unemployment cycle, all those sorts of things, right? Now check this out here. If we look back to the great financial crisis, for instance, right? You really started to see major jump ups in regards to the unemployment rate. Really in Q2 2008, right? In Q2 2008, you started to really see major spikes. At first, no one really took it serious for quite a while because they looked out there and they're like, okay, yeah, unemployment rate's going up a bit, but it's just kind of normalizing. We should be around 5% or so. This is nothing crazy. Q2 2008, you started to see some major spikes up rapidly, right? And by the time you got to Q3, people start to say, you know what? We're getting month after month after month, unemployment rates spiking big. We start getting concerned. And that's what I'm going to show you what happened in the stock market starting at that particular time. And we stopped getting the spike, the major jumps in regards to unemployment rate, really at the end of Q1, going into Q2. And by that time, any moves up in the unemployment rate were just very, very minuscule. And then we actually peaked shortly after that and started to go down. Okay. And so what does that mean for the stock market? Look at this. This is from the last month of Q2 2008 to the last month of Q1 2009. And what we saw is we watched the Russell 2000 go down 50%. We watched S&P 500 go down 50%. And we watched the NASDAQ go down about 47% during that particular time. Absolutely brutal stock market, right? So we need something like this to happen in order to talk about getting a major crash. Or something that, let's say maybe it's not this severe when it comes to unemployment, but something like up here, you could get a 20-30% pullback, a crash in the S&P 500 if that was to happen, right? And yeah, it's not as crazy of a crash as you got in the great financial crisis where the market fell 50%, but still a 25-30% crash is very, very painful, as we all experienced back in 2022 if you were in the market back then. So here's what we're looking at, right? Whenever I think about unemployment rate, I like to say, are we seeing significant bumps up month after month after month? We don't have that yet. We don't have that. So that could come down the road, but we just don't have that yet. Next thing I like to look at is, let's say people are getting fired, right? Can they go get another job somewhere else? And so that's where you want to look at the United States job openings over time. Now, we know there's going to likely be a lot of government jobs cut over this next 3-month span. You're going to see it in the February numbers when those come out. You're going to see it in the March numbers when those come out. And remember, these all lag by a little over a month, so it takes a time to get it. So you'll see it in the February numbers, you'll see it in the March numbers especially, in my opinion, and you'll see it especially in the April numbers, okay? February will just be the start, but I think you'll see the big numbers really in March and April. That's my personal opinion in regards to government job cuts, right? Now, the great news is job openings is still in the many, many, many millions. Okay, so the moral of the story is these government workers should, in theory, be able to find job opportunities in the private sector. Okay, that doesn't mean all of them are going to find jobs, but a good amount of them should, because we still have a lot of job openings out there, right? But the thing I'll say is we're playing a higher game of poker now at this time. And the reason being, job openings have been dropping significantly the last 3 years, really, now at this point in time, right? So this essentially means that if job openings, let's say the government jobs get cut over the next few months, right? And let's say the economy weakens more, you could see job openings continue to drop throughout 2025. Now, that wouldn't in itself cause a massive crash in the market, right? Because that's not like a guarantee. You got to see the unemployment rate going up significantly, big sharp spikes up month after month after month. But it would be concerning to me to kind of look out there if I saw job openings continue to drop. Because that's the biggest problem we had in the great financial crisis, for instance, is people lost jobs and then they had so much trouble finding another job. And if they did find another job, it was like, working at Taco Bell instead of making good money as a realtor or something like that, right? So that's something to keep an eye on. So the thing I'll say about this is when it comes to job openings, we are not in danger territory yet. However, if we see a continued deterioration in these numbers significantly, and let's say we all go all the way down to like 5 million job openings or so, that's when I start to fear. And that's when I start to look out and I say, ooh, that could be actual real trouble for 2026. But for right now, it's just like, keep an eye on it. Like, we're watching, we're seeing what's happening here, but it's not going to tell you like, oh, the big one's coming or something like that, right? And so the moral of this story is very difficult to get an actual stock market crash in 2025. Not impossible, but once again, to have a massive unemployment recession hit this year or to have a Fed hike cycle, very difficult. And like I said, the Fed hike cycle, throw that out. That's, like I said, that's like less than a 1% probability. So the only way you can get a stock market crash is if you have the economy completely fall apart and the unemployment rate spike up massively month after month after month for many, many months in a row. Then we could talk about then we can talk about an actual stock market crash and not just a correction in the market. That's tough, man. It's going to be tough to get that this year. Like I said, if these numbers keep trending down throughout 2025, then we could be talking about something coming in 2026. But time has to play out there, right? And a lot of people like to rush these things, and it's like the whole game has to play out. Time has to play out here, right? Revolve. Let's talk about Revolve, and then we'll get into when AMD stock's going to start to move. We'll talk about Monster in this video. We'll talk about Fubo, right? But Revolve, is this one still an opportunity? Up to 37,000 on it now. Here's the deal with Revolve. Their business is great. Revenue, as far as net sales, went to 293 mil from 257 mil, and gross profit went to 154 million from 134 million. So they were up over $20 million year over year on a 3-month span, gross profit, right? Net income went to almost $12 million, and then diluted EPS went to 17 cents. So the income statement is in a very good place when it comes to Revolve, and honestly, it should get better and better and better. By the way, if you don't know Revolve, they're an e-commerce company specifically heavy in, I would say, female dresses, clothing, average order somewhere around $300 roughly. They are pushing more into cosmetics, and they are trying to push more into men's products as well. But for right now, they're still really, really focused on women's apparel. Like, that's how they actually make the significant portion of their money, right? Balance sheet for this company is a banger, absolute banger. They have around $438 million more in assets versus liabilities. That's versus $385 million at the same time last year. Cash equivalents, $256 million. They're also doing share buybacks right now. So Revolve's got a banger income statement and a banger balance sheet, like absolutely phenomenal. But the question is the stock still a good opportunity? Well, here's the deal. When you look at Revolve's forward P and 2-year forward P, it looks okay. You know, obviously they have major growth rates, and they probably come in and beat EPS numbers throughout the years, what analysts have. So I wouldn't be surprised if their forward P actually ends up being lower than this, and a 2-year forward P as well. But here's the deal, okay? If you think about what makes a stock go up significantly, right? What can make a stock price go up significantly is when a company has these three things. They have accelerating revenue growth, they have accelerating net income growth, and they have accelerating margins. Margins mean gross margins and net margins. If a company has that, it's a pretty good probability it's going to have a very nice upward stock price move. And if you look at what Revolve's now doing and what's likely to play out over this year, they should have accelerating revenues, accelerating margins, and accelerating profitability. And so therefore, I wouldn't be surprised if Revolve actually ends up like if we just look at Revolve over the next 9 months, like I wouldn't be surprised if Revolve stock does very well over the next 9 months. We'll see how it all plays out, but I wouldn't be surprised at all. Before we get in the next one, oh, this is funny. I saw this comment. I had to take a screenshot of this one. I think this was on the last video I did in the main channel. So this person left a comment and said, the only reason the QQQ is down the past 5 days is because I bought some. I apologize to everyone on that. I just thought that was a funny comment, so I had to show you guys that one. I'm not sure how many people got to see that comment there, okay? Next one up here is Fubo. My opinion on the earnings and where is this stock headed now at this point in time. Obviously, the stock got hit heavy on Friday. It was down about 14%, right? But that's one day out of a long battle here. So when we look at the numbers here, revenue went to $443 million. That's versus in the same quarter last year, $410 million. And then if you look on a sequential basis, 386 to 443, right? Which was around 8% growth. So a little slow of a growth rate for Fubo, right? But it looks like they're really watching expenses. Now, when you look at total operating expenses, they actually dropped it year over year. Now, for your revenue to be increasing $33 million on a year over year basis, but your operating expenses decrease, that doesn't happen very often. That does not happen very often. So essentially what Fubo is showing us here is they're really watching their expense profile in a major, major way. Net loss for the company was $71 million at the same time last year. This quarter, it was $41 million. This is really important. Now, in that net loss number, there's also what I would call a lot of kind of one-off expenses. And that's why for a company like Fubo, adjusted EBITDA is going to be very, very important because they had like an extinguishment, amortization on intangible assets. They had some major stock options, which is another non-cash expense. So they had a bunch of these like expenses that were kind of like, I would call them more non-cash expenses. So adjusted EBITDA, I think, is more important to look at for a company like Fubo. And what we find is their adjusted EBITDA at this time last year was negative $50 million. And their adjusted EBITDA in this most recent quarter was negative $8.7 million, which means this company is preparing to flip over to profitability. Look at free cash flow. Free cash flow for Fubo was positive. That's shocking. Like, how long has it been since free cash flow was ever positive for Fubo? That's insane, right? Also, keep in mind they also had a lot of legal expenses in this quarter as well. So there was just a lot of like one-offs, and that's once again why I think adjusted EBITDA is very important to look at for this company, right? Free cash flow, like that's shocking. It was actually positive for the company. Holy smokers, this ain't no dang jokers. Now, importantly, you check out this here, what David Gandler left off on. He said 2024 was another solid year for the company, highlighted by record achievements on the top and bottom lines, demonstrating further progress toward our 2025 profitability goal. The Disney deal should go through, right? But even if it didn't, the company, looking at the company's financials as a standalone company, it looks like they're going to get to profitability, which is something I've always looked at with this company. I'm like, I can see them getting to profitability. I can see how it's going to line up. In looking at Fubo, it looks like they're set up to reach profitability without even the Disney deal going through. Now, obviously, they spoke very highly of the Disney deal and how accretive that's going to end up being in the long run for the company. But even if that wasn't to go through, the company's still looking tremendous in regards to getting that profitability and then expanding it. Because once they do the flip and then we start talking about this company actually being profitable, then the question starts becoming, how profitable are they going to get? And I think this business model can be incredibly profitable long term. If you look at Dish Network over time, if you look at DirecTV and how profitable those companies were and how complicated their business models were in regards to they had these big satellite boxes and they had to put a satellite dish on your house, right? And they had to do all the wiring and the whole crew had to come to it was complicated. Versus Fubo, you can just get on your phone right now, your TV, whatever. It's just super, super easy. And so Fubo doesn't have to worry about all that cost. So where's Fubo's stock price headed? Well, I wouldn't be surprised, honestly, guys, if this stock starts to come back this week. This week. I would not be surprised at all. It's $3 here today. I would not be surprised at all if this stock starts to come back throughout the week. I think a lot of people are going to look back over those numbers, look a little deeper and be like, oh, damn, like this story's actually getting really good. It's actually getting really, really good, right? And so don't be surprised if we look out at this time next week, don't be surprised if Fubo's much higher than where it is today. It's just a question of, is it $3.50, $4, or $4.50? I think that's a real question, right? And also, don't be surprised if there's a $10 stock by this time next year. Once that Disney deal goes through and they also get that cash payment coming in, my gosh, like the world is theirs then at that point in time, right? I think the company's talked about like 6 million plus subscribers, like, whew, and then they're going to have scale. I mean, it's just going to be a really good situation for the company overall. So Fubo, I like the setup here, really good, I think in the short term and over the longer term as well. So Fubo, it's a speculative stock still, like even with the whole Disney deal and everything, and they still got about, I think it was around $169 million of cash or somewhere around there roughly, right? Even with all that, it's still speculative stock, right? And speculative company, but like on the realm of speculation, I think this is not nearly as speculative as many stocks. And the upside potential over the shorter term is just insane. Never mind the opportunity over the longer term here, right? So, Fubo. Next one up here, Cake, in the whole dividend situation. Then we'll talk about AMD and Monster, okay? So, if you're kind of, one of those people that tries to look for arbitrage places, you're going to look at something like a company paying a dividend, like it says here on Fidelity. Cake will pay a dividend of 27 cents on 3/18/2025. Shares purchased before March 5th, 2025, the ex-dividend date, will be eligible to receive the dividend. So some people start saying, dang, you know what? Why don't I just buy a stock right before ex-dividend date, sell it right after ex-dividend date, right? And then I still get my dividend payment. Man, it sounds brilliant. It sounds like, God, I'd make a lot of money, right? Doesn't really work like that. And here's why. The stock price goes down, opens the next day at whatever the amount was down, the stock gets settled to that before pre-market trading, essentially. So let's say a stock was $100 and they pay out a $1 dividend. Now they reset the stock at $99. That's something to keep in mind. Now, the stock market's also going to fluctuate that day, and that stock price will fluctuate that day depending upon people if buying or selling that stock. So that can also move the price. So it's not as perfect as like, the stock closes one day at $100. That's where you bought it. You get your $1 dividend payment, and it's going to be at exactly $99 tomorrow because, once again, the market fluctuates, stock prices fluctuate. But the issue here is, you get this 1% yield, let's say, because let's say it's a 4% annual yield, you get your 1% yield, right? $100 stock, you get your $1. If the stock opens or that next trading day is under $99, you lost money. What happens if the stock's $98 the next day? Okay, now you just got killed. And for what? You probably had to put a lot of money into it to get that dividend payment. So it's one of those arbitrages that newer investors think about, and they're like, wait, this has got to be something like, how did no one think of this before? Everybody's thought of it before. I thought of it before when I was a young investor. Everybody's thought about this idea. It's just a matter of when you actually come to this idea and you're like, wait a minute, I could buy a dividend stock and then sell it off. Like, we all think about it, okay? It's very, very natural. But in practicality, it's much harder. If you're just in a raging, insane bull market, you could probably pull it off because stocks just go up every day in that sort of market. But then you have to worry about taxes as well, right? And additionally, many times you'd be better off if you're in a raging bull market, let's say, for instance, many times you're better off being in what? Growth stocks, not dividend stocks. So you're not even getting the arbitrage you think you're getting in that sort of market. So it's one of those plans that it's like, sounds great until you actually try it. And then you're like, damn, this is actually a lot harder than I thought. Like, because believe me, if it was that simple, dude, everybody would be doing it, because it's like, oh my gosh, like, here's the deal, okay? It's like when I ran track and I was a sprinter. You can try to come up with all these plans of like tricking the market and like these arbitrage opportunities and things like that. But at the end of the day, it's just like, if you want to run fast, run a lot of freaking 400s and 300s and 200s and 150s, and you'll get faster. Get in the freaking squat rack. Do your squats, do your lunges, and you're going to get faster. You're going to run faster and you're going to jump higher, okay? You got to actually do the work. But the thing is, people don't actually want to do the work. And so they try to come up with these like plans on like, how to do these things. They're like, listen, there's no way around the work. You got to do it. You got to look at the income statements, the balance sheets. You got to look at the PE ratios. You got to run projections on your companies. You got to listen to conference calls. You got to actually do the work. I hate to break the news to you, but you got to actually do the work if you want to play this game on a high level over time and actually make money, right? And I teach you guys all that in my private stock group, all in those course curriculums. So if you're somebody that actually likes to put in the work, I got it all there for you. Yeah, you're going to have to watch all those videos. It's a lot of videos, man, teaching you a lot of stuff on a high level. I mean, I honestly probably have a video on just about every subject that a long-term investor would want to hear, and sometimes several videos, right? Got it all right there. It's just a question of, do you want to do the work, right? Pin comment down there if you're ready to put in the work and get up to a much higher level. AMD. Some people call it advanced money destroyer. Some people call it advanced money disintegrator. I call it a stock that's going to make me a lot of money long-term, in my opinion, okay? So AMD, when are the gains coming for the stock, right? And I really just want to talk about the stock specifically and not the fundamentals of the company, which is hard for me to do, by the way. It's very difficult for me to do that. But in all seriousness, in regards to AMD, here's the deal. I believe this stock is going to start to move as early as, I would call it, late spring and into the summer. Because what we're going to have play out essentially is Lisa Su's now committed to the middle of the year as far as launching MI350. MI350 is the first major positive step in the right direction for AMD in regards to really competing with NVIDIA on a higher level, right? And the MI400, which is coming in 2026, is going to put AMD even up to another level. Now, that does not mean, AMD is going to beat NVIDIA and going to suddenly go from a $150 billion market cap or $170 billion market cap to $3 trillion overnight. That doesn't happen like that. But what this does do is it puts them in a great position to compete in these markets longer term. And so I wouldn't be surprised if I'm pretty convinced that the stock's going to start to move in late springtime and into summertime. And you will see the thing with AMD though, when the stock starts to move, it's going to move rapidly. It's not like it's going to just gradually move. No. It will move like 30% in a month. Like, it's going to move dramatic. Now, with that being said, am I going to go out there and buy call options in AMD? Absolutely not. Why not? What did we talk about at the beginning of this video? We talked about recession risk. What happens? We know Fed hike cycle, that one's not happening. But what happens? If they cut all these government jobs, it really sends a horrible signal through the market and vibe, and like consumers pull back and we actually get a big recession and a crash in the market. Dude, AMD's going down. Like, all the stocks are going down if that was to happen. And so if I'm all of a sudden buying call options on AMD because the company's numbers are all going to be great, which maybe they will, at the end of the day, if you're going through a stock market crash at that time, what's going to happen with your call options? They're all going to go to zero. So that's why you're not going to see me out there buying call options in AMD. And, you know, some people might, and hopefully they make a ton of money if they do. But me, I just want to buy the share straight up. Just in case there's that market crash risk, recession hits or something like that in the next 12 months, I don't have to stress over, oh my gosh, all my call options are going to go expire worthless because the stock can't move up right now. And the numbers are great for the company, but the stock can't move up because everything's bad in the stock market right now. Because you know how it is. Like if you get a market crash, look what happened in 2022. Like almost everything got hammered. Almost everything, right? It's just a question of, was your stock down like 70% or was it down like 17%? That was really the only question. But everything gets hit in the end. So that's what's going on with AMD, right? And this is why I'm adding to the stock very aggressively, because I believe the stock's going to likely start moving heavily late spring and into the summer as people start to understand the AMD story better. They start running numbers. They start hearing all the stuff out of TSMC in the production facilities and how many customers are buying AMD and all that stuff, right? In the new MI350 chips. And so I wouldn't be surprised if stock's 200 plus at this time next year, outside of a stock market crash in the next 12 months, right? But if we just have a normal market, decent market, I wouldn't be surprised at all if the stock is $200 at this time next year. So AMD, yeah, I'm feeling pretty good about that one. The monster. What's going on with the monster? It's starting to move up pretty quickly for us, up 9% now. And keep in mind, this is during a market that's not even good. Like the market hasn't even been good recently. And yet we're already up 9% plus in the stock. And how high can this stock go? Well, in regards to their income statement, it was good and bad. And that's why I gave it a C grade. Net sales, $1.8 billion from $1.7 billion. Cost of sales did not go up nearly as much as net sales did, right? Net sales was up, what, $88 million or so year over year, or $82 million, something like that, right? Meanwhile, the cost of sales was hardly even up. The cost of sales was up like less than $20 million, up like $18 million or so. So their gross profit exploded to over $1 billion versus $938 million in the same quarter last year. Their gross profit as a percentage of net sales went to 55.3% from 54.2%. So we're talking, 90 basis points of improvement there. That's a good number. It's a really good number for Monster. But where you have a problem here is operating expenses. Operating expenses went to 34.3% of sales, right? From 29.2%. So clearly they got some issue going on with operating expenses that killed their profitability. Like they still made a lot of money. Like their net income was still $270 million, but it was less than last year despite their gross profit being way higher than last year, right? And this is where me as an investor, I say, let me see what's going on with this company. I don't just like stop at this and look and say, gosh, Monster has really bad spending problems. I don't like Monster stock. No. I say, let me do a little more research because these companies give you all the details. They're going to tell you what happened here, okay? So if we look right here, it says operating expenses for the 2024 fourth quarter were $621 million compared to $540 million in the 2023 fourth quarter. Operating expenses as a percent of net sales for 2024 were 34.3% from 29.2%. Adjusted operating expenses for the 2024 fourth quarter were $488 million compared to $463 million. Oh, okay. And then they tell me that if you go to the adjusted condensed consolidated statements of income and other information, you're going to get a reconciliation of GAAP and non-GAAP numbers. And so I say, let me go to that, and I can find out some details. I'm putting you guys on game here, okay? This is how you just keep researching. Go down the rabbit hole, and you're going to find out whatever you want to find out, okay? And look at here. Here we go. Our reconciliation of GAAP and non-GAAP information. Look at this. Operating expenses. This is a section I want to see. What's going on here? Well, alcohol brands segment impairment charge of $130 million in a 3-month span? What the F is going on? Now I found the problem with Monster as far as their expenses go. It's a $130 million charge in a 3-month span when it comes to alcohol brands. That's the problem. That's what hurt the numbers. So now I know it's not like the company just added 1 trillion employees. It's not like the company just, has some big problem with their core segment of energy drinks. No. They have some sort of issue with their alcohol brands right now, which if you didn't know, this is an article back from March 2023. Monster launches alcoholic product, right? The Beast Unleashed. This is their product, right? A hard seltzer. Well, here's the problem, okay? What I'm showing you in front of you right now That's a stock called SAM stock. SAM stands for Samuel Adams, okay? Or the Boston Beer Company, however you want to call them, okay? They own Sam Adams brand. They own Angry Orchard. They own some hard seltzer brands, some of the biggest you're going to find out there. Their business has sucked for like 3 to 4 years now at this point in time. This is their stock price since April 2021. The stock price is down 81%. And the scariest part is we don't even know if we've seen a bottom yet for the stock. We don't know. And keep in mind, this is at a stock market that's at near all-time highs. Near all-time highs in the stock market, and the stock is down 81%. And this is for one of the most successful beer seltzer companies you're ever going to find. So there's clearly problems in this segment, which makes me think, I wonder if Monster bit off more than it could chew here. And I wonder if they should get out of the alcohol business. My guess is they're going to probably see how the business trends this year in 2025 and then make a decision probably later on this year or next year if they want to keep doing the business or not. But based upon what I'm seeing here, I'm wondering if it makes sense for Monster to just cut this baby and say, you know what, let's stick to selling energy drinks. We've got Monster brand, we got the Bang brand, we got the Reign brand, and we have a few other brands as well. Let's just stick to what we do and forget trying to sell alcohol. It's a tough business, man. It's a brutal, brutal business, as you can see with Sam Stock, one of the best that's doing this. I mean, if Sam Stock has trouble doing this, I just don't know if Monster's going to be able to do it. I just don't know. I mean, they're great at energy drinks, but that doesn't mean you're going to be great at selling seltzers or you're going to be great at selling beer. Like, it just doesn't work like that, right? So when it comes to Monster stock, I don't think there's a ton of upside ahead for Monster. I think there is upside, but I just in Monster because it's a great hedge for my Celsius play, right? That's why I'm in Monster. That's specifically why I'm in Monster, just in case I'm wrong on Celsius, which is my real bigger bet, right? Then Monster would thrive in that sort of environment. Now, I do believe that if Monster announced they're getting out of the hard seltzer business, I wouldn't be surprised if the stock was up huge very shortly after, right? Now, in terms of some stocks that I do believe have some massive upside, I'll likely be doing 4 stocks I'm buying March edition here on the main channel, probably in the next 48 hours, I would say. So be on the lookout for a video, likely in the next 48 hours, of me going into the 4 stocks I see the biggest opportunities in right now. And if you're looking for another video to watch here on the main channel, check out this 52-minute beast. If you've never seen this one before, everybody will tell you they love this video. 16 years of stock market advice in 52 minutes. It's up to 127,000 views in the past 5 months. People love that video. So that's definitely one that will help you out immensely. If you need more help, my private stock group, private wealth group, 1000X, all that can help you out immensely. Pin comment down there, click on that, fill out a form. See if we can get you access to all that maybe some point this week. Much love and have a great day.